the standard disclaimer here on screen, suggesting that all content presented here will be for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here, you yourselves will be liable for your profit loss or loss of profit. So with the disclaimer being put aside, right, I'll just go back to the chart. If somebody is still having any issues, please type it in the comment section. Otherwise, I am bound to believe that everything sort of is working here. So I'll just wait a few seconds anyways, just for a confirmation. If somebody is having any issues, okay, I believe everything is clear. So the way we will be proceeding with this webinar is like always, we will be going over the charts of crude, gold, S&Ps, Nifty and Nifty 50 and possibly BTC and maybe some other charts as well, right? And while I'll go over each chart and discuss the Elliott Wave counts, I will also be taking questions from you. That is the standard procedure. Give me 2 seconds, guys, and we will continue. So yeah, guys, sorry about the extreme delay due to technical issues. But as I was saying, now we are going to start off with the chart of crude oil because crude oil is the first thing we generally discuss. And before we move any further with that, quick introduction. My name is Nirav. I'm the founder of 50 Eyes Market Analysis. 50eyes.com website should be visible now on screen. Here is the work that I do. All these webinars that I've been doing every month on month for last many years are posted here. Plus, you can also check out my courses, training programs, etc. on this website by going the courses section. And any other update that I have or course or article that I publish is always going to be published here. So that's my main center where you can get the information about what's going on. Secondly, I'll just draw your attention quickly to the forecast accuracy because I've been doing this for so many years. I have also managed a track record since 2016. You can see 2016, our accuracy was 83.34%, 17, 87%, 2018 it was 84.6%, 2019 84.88, and 2020 is 88.52. 2021 82.22. So as you can see, for last 6 years, I believe, yes, 6 years, I have managed accuracy of higher than 80%, close to 90%, between 80 and 90, or whatever you would like to say, which is something unseen in this industry. And the way these accuracies are calculated is I check out the instrument name, the price, the analysis which we did, and if the analysis worked out or not. Everything is marked with dates. And if you click on this link, you will find the actual video, which is the YouTube video or the live webinar, which I'm doing right now. So with that being out of the way, yeah, one small announcement. I have not run any batch for the last 3 months. So new batches will be starting soon. Look out for my email on the same. These batches are one-to-one classes and they are extremely detailed, and further details or inquiry you can do with me over the emails. Now let's get to the actual business, which is discussing the chart. So first of all, we have the chart of crude oil on screen. Okay, I have a confirmation of TradingView at least. Thank you, Adaji, for the confirmation. He's saying awesome. So at least the things are good over there. And seems to have dropped participation on YouTube. So I'll just refresh it once and see if it's an issue at my end or what's going on. Okay, guys. So you can keep commenting either on TradingView or on YouTube, wherever you are at, because the issues of audio and video have been resolved. Now proceeding with the analysis on crude oil, we are on the chart of 4H chart. This is the actual NYMEX futures chart, by the way. And from the point of reference, which is around the level of 130.29, my main count here is that we seems to be having a wave or a leg down here. So there are two variations. I'll go over this first variation first. So we are considering this as an A wave down, this leg as a B wave up, and we are considering that the C wave is possibly continuing, right? In this particular count, my idea is that I seem to have, there was a diagonal here, but yeah, that is a diagonal. So I seem to have spotted a possible diagonal here, and that seems to be suggesting that C wave would possibly have one here, two here, and then it will go down for the 3 and then the 4 and then the 5. So C basically has at least one leg down remaining. That is what this count is suggesting. So that's the count which we will call as our, let's say, hypo 2. So our hypo 2 is suggesting that seemingly some more downside is remaining. Now, if we go into the nitty-gritty of this count, then I think that this 2 is also not yet complete. And possibly the 2 may have completed here, or it may even be having some upside remaining, right? So long story short is that while we are looking for a wave 3 down and then wave 5 down, we are not sure if that down leg will start right off. So simple thing I can do here is with what I've already done. I have placed a alert around 82.31 on this chart. So below that, I'll be interested in looking out for shorting in this market, right? So that's my hypo 2 on crude oil, which is suggesting bearishness. Now at the same time, I have another hypothesis, which is, as we will see what it is, and let's just call it as a hypo 1. By the way, if you guys are still online and if you can hear me and everything is clear, just type in clear on TradingView or YouTube, whatever you are watching this on. That would help me know if there is some other issue again. I can just refresh or try something. I'm also noticing there is a delay in the time the stream goes from TradingView to YouTube. So anyways, I'm not seeing any comments here on YouTube at all. Let me check the audio again here. Okay, so I have a clear there. So continuing with our analysis of crude oil, the second hypothesis I am expecting or seeing in this market is that this leg down is a corrective WXY, in which case we are counting the first leg down as a W, the second leg up as an X wave. And because we know in a WXY progression, I'll just draw roughly on this free area on the chart. WXY progression, you expect the market to fall in 3, up in 3, and then the next leg is again in 3. So we have done the first part, which is the falling in 3, which is the W. We have done the second part, which is going up in 3, which is the X. And the next part is going down in 3, which is the Y. So in this particular instance, I am assuming that the wave Y is a here, a B here, and a C possibly here. So as you can see on the rough chart, which I have drawn in orange, the A will be this leg, the B will be the leg which goes above or to the upside, and C will be the leg which goes to the downside, taking out the low of wave A. So as I just drew it on the actual chart, it is sort of self-explanatory here, right? Now, if the C is complete, or is the C continuing, or is it forming some other complex count, there's a simple way to verify it, or not verify it. I would say it's a wait and watch scenario, but you can simply draw these trend lines, right? If the market moves higher than this 0 to B trend line, which is drawn from the starting point of wave B to the end of wave B and then extended a bit further. So basically, if we see a break above the 0B trend line, then we will be suggesting, then the market will be suggesting that some upside is there, right? If we do not see a break above this trend line in the near future, but the market continues to the downside, then you already know what it is doing based on hypothesis 2, which we discussed just before this. So to conclude this particular analysis on crude oil, we have basically the scenario that hypo 1 is suggesting maybe the market is going to go up, but we will wait for the break of this trend line for the confirmation, right? Scenario 2 or hypothesis 2 is suggesting, let me see, colors can be changed. Hypo 2 is suggesting that the market is going lower, and in that particular case we are going to wait a little bit for the downside targets, not downside levels to achieve, which were around 82 something. So those are the two scenarios. I believe the upside is pretty clear and self-explanatory, and once the trend line is taken, we can then reanalyze and see. Same goes for the downside. It was even more simple, and I believe we can strategize trades on both these outlooks quite easily. So that's all for my analysis on crude oil. If you have any doubts, you can just type them in the comment section. If you don't have any doubts, type clear in the comment section. That will, okay, we window to take longs. So yeah, we will look for longs if the market takes out this upside channel. So there are two ways to go about it. Either you can take immediate longs once this channel is taken out. That will be a little bit risky. The standard way is generally to wait for the market to take out this upside or the trend line, and then possibly give a retest. If the market gives a retest here, then the standard strategy is that you can add 30-40% position here, and remaining 60-70% position you can add at the break of this last high, right? But the thing is that when the market is extremely strong, it will not give any pullback to the trend line, right? But if it does, then this will be a golden opportunity to add some bigger sized positions. I hope this clarifies the doubt you had. Again, if you guys are clear, just type in clear. Any further queries, I'll just wait and see. I am seeing there are some participants on YouTube, but nobody is commenting. TradingView, I'm not sure what's going on. It's saying 0 online, but I'm still getting comments. Okay, so we have a clear from Rajiv Sharma and Madhavji. So that means all is good on crude oil. Let's move ahead with the chart of gold. So gold is interesting. We have two outlooks again. Firstly, let's start off the discussion of the chart of gold with the last point of reference, which is the 2070, I believe. 207 something level. We will call this as our point of reference, POR, right? And from this point of reference, we have what I have labeled thus far as a, let's just call it a A. There are other interpretations possible, but they don't really change the outlook much for me. Rajiv, let's wait till the end. I'll discuss Nifty, and if we get time, we can also go over Bank Nifty. But Nifty definitely we will discuss. Depends on the time we get. So now that we are coming back to the chart of gold, we are suggesting, I am thinking that this chart has a wave A down over here. This is the B up over here. Now, the wave C can be counted in two ways, right? So the first way I'm thinking is, by the way, those of you who are not very much familiar with what I'm doing here as an ABC, I'm drawing basically a possible flat pattern, and a flat patterns will have a 3 down, a 3 up, and then 1, 2, 3, 4, 5. So that's your first 3 down is called an A. Next 3 up is called a B, and the leg down is called a C. And this B should go to 90% or greater level. So it almost went till 99%, I believe, 99.7 or 8% something, but it never crossed the high. So this can be considered as a possible flat correction. Now, getting back to the point of discussion, we are now interested in this wave C, right? Now this wave C, first interpretation that I had been running was that it's impulse going to the downside. But when I looked at it again, I have another view of it. How about we take this as a 1, 2, 3, 4, and the 5th. So indeed, this will be what you will call a ending diagonal, expanding in nature. Now, the reason we call this pattern as an ending diagonal is it has 5 waves, just as I drew in the rough area on the top right. but those 5 waves are having an overlap between wave 4 and 1. So whenever there is an overlap between wave 4 and 1, it goes to the diagonal pattern, right? So if this is an ending diagonal, then again, it's a very clear setup. If this is an ending diagonal, we will again discuss this second possibility after this one. So considering the market follows this count, we already have the 2-4 trend line, right? And the 2-4 trend line, once it is taken to the upside and the market possibly retests it. Remember, retest is not really important or necessary. It is important, but not necessary. But if the market gives a retest over here, then that will be a classic long trading setup. Even if the market takes out the high, that's a setup to enter partial longs. So you can enter certain longs over here when the market takes out the high. If it gives a retest, add more longs here. Let's say 30% position here, 30% position here. And once it takes out the high, then 30% more. So that's how you build bigger size positions. That's my quick outlook on this hypothesis of gold. We have another variation, which I'll discuss. If you guys have any doubt on this variation, you can type it in here, or you can just type in understood or okay in the comment section. I'll just wait 2-3 seconds because I believe there is a decent delay. Okay guys, so let's move on to the second hypothesis on gold. I believe there is no doubt here. I cannot see thus far anything in the comments. So the second outlook is that it is still, thank you for the response, Madhaji. And now the second outlook was that we still have a simple impulse going over here. Actually, I have done the whole counting. Let me see which chart. Yeah, there it is. 1 second, 1 second. 5 and just 5. Yep. Yeah, that's the count. We can just discuss it over here on the clean chart. It will avoid any confusions. So that was the point from which the wave C had started, as we discussed earlier, right? In this particular count, which we just discussed beforehand, we were suggesting diagonal. And as I said, the second count we have is that it's an impulse. So in the second count, we are considering that this is a 1, 2, 3, 4, 5 for a wave 1, right? And then we are considering that this is possibly the 2. Either it's complete over here, or it will just have some sideways movement as a flat, most likely, and then go down for the 3. So basically what I'm suggesting is a simple pattern of a impulse. Wave 1 down, wave 2 up, wave 3 down, wave 4 up, and wave 5 down. So if we compare this with the actual chart, we have our wave 1 down is already complete. Wave 2 is either complete or it will complete very soon over here, and then will be followed by wave 3 down. So this is extremely bearish, because if that's the count, wave 3 down can go quite deep, right? And if it goes quite deep, then that is also suggestive that maybe this is not an ABC, maybe it's a completely 1, 2, 3, 4, 5 pattern going to the downside. So, but that's for later. It's simply suggesting currently that more downside is possible. For upside, as we discussed in the last count, we wait for the trend line to break to the upside. For downside, I think I have a level marked here very quickly. Let me just check it. So level of around 1650. So below 1650, we will be expecting more bearishness in this market. 1650 is somewhere around here. It's actually quite near to the last low, by the way. So below this particular level, we will be of the view that more downside is possible on it. So there's a question here: when to get clear picture. So clear picture is upside. We will have a clear picture if it's breaking the trend line to the upside, right? Simple enough, this trend line. Downside, we will have a clear picture below 1650, right? So below 1650, we are interested in analyzing or going with the short side. above this trend line, we are analyzing or going for the long side. Does that clear your query? What about the other participants? I think there must be some other people who are viewing it, but are acting as silent listeners. Keep in mind, guys, this is a webinar, so sort of participation is necessary here. That's the whole point of webinar. So if you are live there and you are listening to me, at least type in clear or whatever query you have so that we have a flow of. Okay, I believe gold, there is no doubt. I cannot see any comment at least thus far. So we will move on with the next chart. The next chart is of S&P 500. And before we move there, I know there is a certain amount of delay which is going through in the stream because of some technical issues. So you can type in your comments even later and I'll answer them in the middle as well. Generally, we wait for a chart to complete, but because even we are having a technical issue here, I'll just answer in the middle. Now, S&P is 500. Let's move on to this chart. And on the shorter time frame, we are having just a very good bearish count. Let's see. So this is the high around here. What is this level? Let's see. It is the level of 48 something, 48.15. Roughly speaking, and we'll call this as our point of reference. From this point of reference, we have what I have assumed to be a diagonal structure, right? A leading diagonal to be more specific. And then we have what you call possible wave A, possible wave B, and then possibly going down for the wave C, which should go like this at least. Now, generally in a structure like this, we draw the 50-60% retracement level. So those of you who are not much familiar with Elliott Wave, this is a standard example of a zigzag kind of structure. A zigzag structure is basically 5 waves followed by 3 wave correction and then another 5 waves down. So the first leg down, this leg down, which is basically a 5 wave leg down, is called a A wave. The 3 waves up is called the B wave. These 3 waves generally end between the 50-60 retracement of this A wave down. I'll discuss more on what a retracement is if you guys are completely new, for those guys who are completely new. So as I said, we wait for this retracement and then this leg down. So a retracement basically will be, we will use the Fibonacci retracement tool and we'll start from this point and draw it till this point. So I'll just draw it for the purpose of illustration. We'll take this Fibonacci retracement tool on trading view and then we'll select at the top left and then draw it till the top bottom right, right? And we will mark this 61.8 level and 50% level. So what I like to do is I just simply like to draw a box here. And as you can see already, we have a box here. As you can see, the market also did actually go in there and actually reversed from there, right? So far this market is exceptionally clearly following the guidelines or the interpretations which we have from our Elliott Wave analysis, right? Furthermore, let's see what this market is expected to do in the future, right? So first of all, if the B is complete already here, if this is the actual A with the diagonal and this is the actual B of the diagonal, then the C should obviously proceed to the downside, right? So simple interpretation is we are definitely thinking bearishness is on the cards on S&P's 500, right? We will discuss the targets as well a little bit later in the discussion. First thing clear, C is remaining is our interpretation unless this count is completely incorrect. Second thing, B looks complete because it has gone in the 50-60 box. But one thing to observe is it did not touch the 60%, 61.8% level, which is this upside line, right? Now, again, this is not a rule or anything. It's not required to touch the 61.8% level, right? But it generally does, right? So that leads to two interpretations. Firstly, if it's not doing the generality or doing the general thing, which is touching this 61.8 level, then it means the bearishness is sort of quite strong, right? Second interpretation could be that it actually still has time to go and propagate for touching that level, right? Let's work on both of them one by one. First interpretation is that B is already complete, in which case we don't have much to fear. Technical stop loss will be here. You can also put it at this pivot, right? Although I don't think it's a good idea because it could become a expanded flat before going down. But anyways, technically then your stop loss will be there if you think the B is complete and the C down is there. But as I said, if it is still to go and touch the 61.8, then it is possible that the wave B is propagating as a complex correction. Let's go with the WXY interpretation, in which case it will again have one more leg up, which will go and touch the 61.8 level, and then the market will fall down. That's why you saw I have written two Bs on the chart, right? One is over here, one is over here, right? So as I said, it is a swing perspective. It is a sell trade, right? The other interpretation is we don't have any clue for this particular interpretation yet. It is possible it's just a hypothesis which will possibly not play out. So that's why I'm consuming or not consuming. I think this should be labeled as a hypo 2 or the less likely scenario. And this one that B is already complete should be labeled as a hypo 1 or the more likely scenario. So that's my interpretation on the S&P's chart. Swing bearish, right? With the possibility of a possible up leg, which we'll have to incorporate in our trade, right? Possibly some good amount of option selling can be done here with those two levels in mind. Actually, it's a good opportunity for that. Anyways, I guess we are clear on the S&P's chart. We'll move on to Nifty 50 next. But as I said again, what is your level of understanding of what we just discussed? Are you able to catch the points? If so, lighten up the comment section at least a little bit. Okay, thank you for the confirmation. Let's move on to the next chart, and the next chart will be, as we just said, the S&P's 500. S&P's 500, S&P's 500 was the current chart. My bad. So next chart is Nifty 50. We can also have a look at BTC. I'll just quickly give you my outlook on BTC because it's not much to discuss here. I'm thinking that it's forming a sort of corrective pattern since the last low of 17600, maybe 604 something. And there can be many interpretations. You can even consider this whole thing as A up, B down, and C up. That is more upside remaining. But I think once this low is taken out, it will open up to the downside target, which is around, where is the marked level? Yeah, there it is. Minimum, not minimum, expected downside target is around 15,200 and lower levels for BTC. And we are thinking that this count is definitely valid given how weak this chart really is. So that's my quick outlook on BTC for those of you who are interested. Not going to cover it in much detail. And I just realized on S&P, I have forgotten about the targets which I was mentioning for the downside. So where's that? Let me quickly check it. Daily chart. Yeah. So there are two target zones for S&P. First target zone is around 3502 to 3196. So let's say 3500 to 3200 is our first target zone based on my long-term hypothesis or the weekly and daily chart interpretations. We can cover them later if you guys want, if we have the time. But right now, first downside target 35 to 3200. Second interpretation which I have on the weekly and daily charts is suggesting the target is around 3396. So 3400. So basically, both my long-term interpretations are suggesting the same targets between 3500 and 3200. Again, the reasoning and everything else, if somebody is interested, they can type in the comments. Otherwise, I'm moving on to Nifty. So I think somebody was asking for Bank Nifty as well. Rajiv, are you still with us? Do type in the comment section. I will look to cover it if there are at least 2-3 people who are interested. Already Madhavji has commented Bank Nifty, please. So Nifty, let's quickly look at it. A lot of analysis here, many hours of work. So this is our point of reference around 18600, right? And the market has gone lower to whatever that is, 15204, 15220, whatever that low is, I mean, right? There are many ways you can count this. I think my main interpretation was this, which was basically a right. So basically this suggested that this low is placed here, right? We were able to get a low here, and from there on the market is going up, right? Now if the market is going up from here, then what is the interpretation? We are now only interested in this leg, okay? So let me zoom into this chart and see what counts I have for this leg. Basically I have two counts here. Let me quickly go over them. Actually, as a matter of fact, looks like Z4-5. Not much of an issue. I'll just cover one because they lead to the same interpretation on the shorter time frame. So because there is no, what do you call, conflict, let's just stick with one here. So I'm removing all the counts here. So the first interpretation is that this is a 3 complete here, and this is an A, B, C, D, E triangle going on, right? Once the triangle is complete, we will have another leg up for the wave 5. Now keep in mind, this is very contrary to the S&P 500, but then again, S&P 500 is a developed economy, and India is a developing economy. So you should not expect exact correlations a lot, right? Generally, they do have a great correlation, but not always. So anyways, one of the interpretation is that it is continuing sideways for 4, and then there will be a 5, right? So one more up leg remaining, right? But wave C generally should not be this fast, although it could be. So we will have to consider the secondary possibility that the 4 is already complete here. If the 4 is already complete here, maybe the 5th is already complete as well, right? Again, we do not have evidence for it. So when will the evidence come? The evidence will come, a clear evidence. Again, these things like confirmations are generally late. So a late confirmation will be around 17,200. If the market breaks below 17,200, you will sort of have a confirmation that this 5 was already done. Again, I'm repeating myself, but confirmations are late. So you have to definitely rely a little bit more on intermarket analysis and some other things, not the subject of discussion. I mean, it will become very lengthy. So downside confirmation below 17,200, triangle pattern still valid, still not relegated, right? So basically that's the main gist of Nifty, right? Some other things I can observe here, but they do not really affect our analysis in the shorter time frame. One thing I can definitely see is that if we are in a 3 complete over here followed by 4 possible triangle here, then we can look out for the wave C, and wave C's are zigzags in a triangle. So if we see a pullback in 3 waves here, we can on the shorter time frame look for selling it. And this is something which will happen. If it's a wave C, it will happen like that in a triangle. So that's your short term idea which you should be looking out for on this chart. I'm on 4 hours, so maybe look out on 1 hour or something lower. You will probably get a possible sell setup here, possibly. Now let's see what do we have. Also, before I move further to Bank Nifty, can you type in clear here so that I know that you were able to understand whatever interpretation I had on Nifty. Comment section, please. Extremely low or almost none participation on YouTube. I believe the bad stream quality earlier was the reason. What about trading view? Type in clear before I move to Bank Nifty, or if you have any question, obviously type that. To market analysis, and I'll just recheck the comment section there. Upside resistance for, yeah, so I have a question. Any upside resistance for Nifty? Any upside resistance for Nifty? Let me check on the chart. Upside resistance. So see, if our interpretation of the triangle is there, then this is a this is a B. So okay, so you are talking about target for wave 5, I believe, right? If it's a triangle. Okay, fair enough. Let's see. Let's see if I have it marked. Oh, I already have it marked. So if it's really a wave 5 up, the minimum target we expect is 18,311.55. That's our minimum expectation or expected level on the upside, 18,355. Sorry, 18,311.55. Something roughly. Exact levels are not really necessary. Okay, so I believe we are done here. Let's go to Bank Nifty and see what's the drama over there. Bank Nifty, I believe, sort of the same analysis. Let's go to hourly to get a better picture. Again, a lot of mumbo jumbo on the left hand side, but let's leave that. We are not really interested in that at this point in time. 3, 4, 5, 4, 3, 4, 5, 3, 4, 5. Okay. So I guess you can follow along on this one. I'll draw a rough instance of the structure I'm talking about. I'm talking about an impulse, right? So wave 1 up, 2 down, 3 up, 4 down, and 5th up is what the structure is. If we match it on the left hand side, 1 is here, 2 is here, 3 is here, 4 is here, right? Now, Elliott Wave guidelines suggest, not guidelines, that's the way with Elliott Wave structure is that in an impulse, the wave 5 will have 5 waves inside of it. So if the wave 5 will have 5 waves inside of it, then if we magnify this wave 5, it should look like this 1, 2, 3, 4, 5 again. We can probably label it as double bracket 1, double bracket 2, double bracket 3, double bracket 4, and double bracket 5. So that now becomes our point of interest because that's what we are in right now. Now comparing it with the actual chart on the left hand side, wave 1 is complete, wave 2 is complete, and my interpretation is that the 3 is complete here. Let me just drag it down. Yeah, so 3 is complete here as well. 1 here, 2 here, and 3 here. So if this count is correct, then there should be a wave 4 double bracket, which I've already written over here, right? And then there should be a wave 5 double bracket. That's the interpretation, right? But the thing is that you don't want to trade the end of a end of a end, right? If it's a wave 5 and inside this wave 5 there's a double bracket 5, then it's sort of the end of the end. So these things are hard to trade and very risky, even if there's a minor error in the counts here, or if the market decides to become more bearish, then it will not form that. So that's basically the interpretation here. If it's correct, then one more up leg is there. I seem to have a question here. How can I learn Elliott Wave charting and forecasting? Rajiv, I have a complete course on it, the complete guide to professional trading with Elliott Wave. It's on my website. I have a book on it, Think with the Markets. The book is sort of the advanced material. It's not for beginners, intermediate, and so on, advanced. So course is there. And then again, my YouTube channel has these webinars every month or so. I was not able to do one for the last 3 months because I was busy with the accounts I'm handling. So, but these have been done for many years. As you saw, my track record is for 6 years or something. So definitely go and check out my website 50is.com, so on and so forth. I'll talk about it later. Let me finish the chart here. I thought the question was regarding the chart. So we now have an interpretation suggesting that possibly wave 5 is remaining. As I warned a little bit earlier, end of an end is not the best part to trade. And you can also keep in mind that S&P is looking super bearish. So any longs here, I will consider them as very risky. But yeah, on intraday, we can look out for them, and on short terms, we can look out for them. Secondly, this question is regarding chart, I believe, resistance and support for Bank Nifty. So there is no real, what do you call, benefit of having a resistance and support levels, Rajiv. You keep asking them over and over. Because the thing is that these levels, although they are there on the chart and I can mark them, they keep changing. If the count changes a little bit, the resistance levels will change a little bit, the support levels will change a little bit. So while I can just tell you some levels, it's more important you try to understand what the counts are so that you can, in your own analysis later on, update the counts as per the market's movements and then get your updated support and resistance levels. I believe your questions are more motivated from those supply demand videos and courses which are cropping up everywhere on the internet. These things are easy and people love making courses and talking about them in their YouTube videos. So those guys use a lot of these words like support and resistance. Anyways, I'm not saying it's useless, but I'm just saying that you should look on this matter in a dynamic perspective, not a constant perspective. So coming back to this particular chart, downside, we can say that the downside wave for low is what you will call as the level where we will consider the complete bearishness in this market or extreme bearishness, if not complete bearishness, right? Secondly, on the upside targets, we can use the simple Elliott wave thing. We draw a channel from the wave 2 low, which is the double bracket wave 2 to the wave 4 low and projected from the wave 3 high. This is supposed to give you the upside target. This upside channel will give you the resistance level. So this whole upside channel will be considered a resistance level. Worth keeping in mind, we don't know the exact low of wave 4. It looks like it may be here, but who knows, maybe it will give a spike down, so it can change. But again, I'll just remove everything and explain it again. If this is 1, this is 2, this is 3, and if this is the 4 low, then you draw this channel, right? And this channel's upper trend line is the resistance. So that should clarify your query, Rajiv. So that is for the main interpretations I have on crude, gold, S&Ps and Nifty. Oh, I have some questions on YouTube now, suddenly. Nifty view once again, please. Vedant, this will be available as a recording, so you can check the Nifty view in that. And also, I think the feed on YouTube was not proper, so I'll probably upload the local recording I am having, so you should be able to view it very quickly. Ronald Ford is asking, just got the email, will I have to watch the replay? Yeah, Ronald, I believe the time at your end is probably morning. So good to see you, by the way, again in the feed. So yeah, guys, those were my interpretations for crude, gold, S&Ps, Nifty, and BTC also we covered. Madhavji saying very well explained. Thanks. Thank you for joining in, Madhavji. And at this point, I'd like to make some announcements which are not in regards to, which are not sort of marketing thing. So first of all, I have not run any batch on my training program for the last 3 months because I was busy taking those bigger accounts and handling them. That's why there was no webinar as well. So I will be announcing a new batch. You can look out for the emails if you are interested in that. Right. Secondly, where is that? Subscribe to the emailing list here. I'm thinking that I might do a little bit more on the webinar side. Like I'm thinking of, just off the top of my head, I'm thinking of doing some, what do you call, live trading sessions and broadcasting them, right? So I will probably do them from this Monday. I'm not so sure how much of participations they will have. 12:30 in the morning. Oh, okay, Ronald. So anyways, those are the two main things. First, new batch upcoming. Second, I'm thinking of doing some public projects. So definitely subscribe to the emailing list there. Otherwise, you will not know what's going on. And also, I want participation. Lastly, yeah, my book is out. I think it's been quite some time, but for those of you who are new viewers, Think with the Markets is available on Amazon Kindle, right? And there's also a video webinar on which I did on the whole book, discussing all the concepts from the book. It is again available on the website under courses. Advanced Elliott Wave Concepts webinar. That's the webinar on Think with the Markets. I should probably rename it, right? It's confusing over there. Nothing. Those interested in training program and do not want to wait for the email can send a direct inquiries here. So I think that's about it, unless I'm missing something. Yeah, there's a video course as always. So yeah, guys, everything is on the website. You can go to courses section, find the video course, training program, check my accuracy and forecast accuracy, and subscribe to the emailing list by visiting this link. Right, all three major links I have just highlighted here. And the most important thing of all, do not forget to share this webinar as soon as it's available as a recording. I believe the YouTube algorithm takes a few hours to process the thing, right? And I will probably upload a recording which I have on my local system, because this YouTube feed seems to have gone bad. A lot of people were joining in the beginning and saying nothing is visible or nothing is audible. So sorry about that, guys. Next time I'll try and check it before broadcasting. So thank you, everyone. Thank you for joining. Thank you, Raji, Madhavji, Andres, Philip, Himat, and Ronald, and Vidhan. Thank you for joining in, and definitely share it. And I'll see you guys in